Good evening to each and every single individual. Hopefully, all of you guys are doing exceptionally good. So, the purpose of this one will basically be dealing with June 2019 question paper, whereby we have to do branches. We have to do branches. Branches is a great topic, as we already know, guys. Right. As long as you know your principles and also your structures, I think all of you guys will excel in this type of topic. So, worry less. So in the first tier account, we're supposed to be dealing with branch stock account, and the second one, branch adjustment. So the first thing that is paramount for you to know is your what? It's your structures. First thing that you're supposed to draw, you're supposed to draw your structure, in which you have dealt with our structure before. So currently, we'll just be dealing with the practical session. So let's check our question paper. In this type of question paper, we are supposed to be dealing with the selling price method. We are supposed to be dealing with the selling price method. They told you that we use the selling price method with a markup of 100% on cost. So let's check our adjustments there. So they gave you a pre-adjustment trial balance there, in which they said that stock at the branch on the 1st of May 2016, when our commencement or when our year commenced. It began on the 1st of May 2016. Normally, you know that they will normally give you selling price and also cost price, but then there are various ways in which they can assess it. In this question paper, they only give you a selling price method, meaning your cost price for balance at the beginning, you had to calculate it, and for other balances in which required cost price, you had to calculate cost price by yourself. But then remember, for your branch stock, you only have to use a what? You only have to use your selling price amounts exclusively. So for balance at the beginning, it's 14,700. So on the debit side, you will write your balance brought down as your 14,700. So you open your stock. Now we open our business with a stock that amounted to 14,700. And then secondly, they gave you a petty cash at the beginning. You'll not use it. Your debtors at the beginning will not also use it here. And then secondly, they gave you what? Your goods sent to the branch during the year, which is 188,400. So we received the goods. So we'll have to debit that amount of 188,400. We'll have to debit it. Let's go debit the amount. 188,400. 188,400 there. And then remember, they only give you selling price. Also, goods returned at the branch, 8,400. So we'll credit that amount. Returns, 8,400. And then they give you what? Goods returned by the branch, we did record it. Branch cash sales. So on the credit side of your tier account of your branch inventory, you'll have to write to a branch bank. And then you'll write the amount of how much? Of 76,570. 76,000. 76,570. And then also give you branch debtors. Your branch debtors amounts to what? Amounts to how much? Your branch credit sales also they give you it as 47,800. So you'll write branch trade receivable 7,800. 47,800. And then they also give you a collection from debtors. In which it will affect your branch trade receivable. And they also give you cash supplied. They also provided you with bad debts, and also they provided you with 2 discounts. I think for discounts, let's close off with our discount. We'll come back to it. After that, they give you expenses in which you're not interested in them. And then let's check our second last thing. They give us what? Our closing stock, which amount to apologies. in which it amounts to 6,580. So we'll write 6,580 here. Is it 6? I think it's 16,580. 16,580. With regards to our branch trade receivables, we know that these are returns. There were no returns that occurred during the year. There were no returns in which occurred during the year. And then let's go to our discount. For your discount, you have two types of discount. You have discount on trade receivable, and also you have discount of cash sales or discount on sales. Discount on sales is, we call it trade discount. When we did our income statement, normally we would minus our trade discount way on our sales. On our sales. And then we have what discount allowed to debtors. That one in our income statement, we normally what? We normally record it in expenses. That's what you know. But then when we go to our T accounts, our discount to debtors, it will affect your trade receivable. And then discount on this one, it will affect your branch adjustment, and also it will affect what? It will affect your branch inventory. For branch inventory, if ever in the near future, because they seldomly assess it, if ever you interact a transaction that talks about your branch discount, which is a trade discount, your branch discount on sales, that's the key word there. For your branch discount on sales, you will have to credit it in your branch inventory. It will affect it. Right? Your branch inventory. Okay, sorry there. You write it as branch adjustment. Apologies. Branch adjustment. As we say that will affect your thing. Pardon my grammar error there. Discount on sales. I think they amounted to 890 there. So right, 890. Remember that one, it's seldomly okay. Or it seldomly appear. So but then you should be vigilant about it. If ever it appears, just know that you will credit it. We call it discount on sales, which is a trade discount. We'll have to credit it there. Let me highlight it with a different color, blue there. And then at this stage, you will check which side is the bigger side. You will check which side is the bigger side. We said that, I know that in our class we said that for our branch inventory, the bigger side will always be the credit side, in which a balancing figure will be on the debit side, and then we'll call it branch adjustment. But then it's not always, but there will be situations in which the debit side is the bigger side. Meaning if your debit side is the bigger side, ungathuki, you will have your branch adjustment here. And then you call it a deficit. It simply means that you did a deficit. Deficit. Deficit only occurs if ever your debit side is the bigger side. If your debit side is the bigger side, simply means that you will have what you call a deficit. But then if ever the credit side is the bigger side, you will have a surplus. Let's check it there. Judging by the look of things, our debit side seems to be the bigger side. So in that situation, we'll add our debit side. Simply means that we will not have a branch adjustment on a debit side here. Not have a branch adjustment on the debit side. So let's add our debit side. We'll say 14,700. 14,700 plus what? Plus 188,400. And then we'll get 203,000. 203,100. Also here we'll write 203,100. And then you can clearly see that we did a deficit 203,100. So we'll say 203,100 minus all those amounts that are on the credit side. Minus 16,580, minus 890, minus 47,800, minus 76,570, lastly minus 8,000. 400. And then we'll get 52,806. I think this one, it was a little bit difficult because of the, so deficit will be 52,860. So we do not have a surplus, simply means that we did a deficit. So it simply means that our branch adjustment, which is this deficit and also our discount, when we go and do a branch adjustment ledger accounts, on the debit side, you should have these items. On the debit side, you should have these two items, which is 890 and 52,860. Let's go record them. Let's do a branch adjustment. Normally, a branch adjustment, when we did a branch adjustment, we know that on the therefore on the credit side, we'll write branch inventory. The first branch inventory is that discount. We'll write discount of 890. And then the second one is what? Branch inventory, which is our what? Which is our deficit. We did a deficit. Deficit, which is 52,860. And then we'll debit them there. Record them there. Branch. This one, let's highlight it with blue there so that it doesn't confuse us. And then other than that, it simply means that on the debit side, we have balance. On the credit side, pardon me, we have balance brought down. We know that in this thing, we always say selling price minus the cost price. So meaning for your balance brought down, you'll have to take your selling price and minus it with your cost price. But then remember, they only provided you with your sales. For balance brought down, they only provided you with your sales. So what are you going to do? You'll use your markup. There's a reason in which why they provided you with your markup. They say that you know that markup, our right cost of sales. My cost of sales is always 100%. That's one thing that you should supposed to know. My cost of sales is always 100%. You'll write 100% here. What about your sales? Your sales will always be 100% plus your markup. 100% plus your markup. How much is your markup? 100% also. Meaning your sales will be 200%. So these things are important, hence I'm writing them there. Therefore, I'm going to use my traditional hierarchy formula whereby I say amount multiplied by what I want over what I have so that I can have my cost of sales for my opening balance. So for opening balance, I will say 14,700. Multiply by what I want over what I have. Multiply by what? What I want over what I have. Multiply by 100 divided by 200. And then you'll get your cost of sales. Let's calculate it. 14,700 multiplied by 100 divided by 200. And then we'll get 7,350. Simply means that 7,350 will be your opening balance cost of sales. 7,350 there. It will be your opening balance cost of sales. So at the beginning of the year, you do your traditional thing. I know that I'll say sales minus cost of sales, meaning 14,700 minus my cost of sales minus 7,350. And then we'll get your value there, which amount to 7,350 also. Just like that. And we'll go to the second thing. Even in the second thing, you'll do the very same thing. What are you supposed to look for? Let's look for the goods that you received. Also with the goods that you received, you'll use the very same formula. Amount multiplied by what I want over what I have. Amount multiplied by what I want over what I have. The amount that we received was how much? 188,400. Therefore, say 188,000, 188,400, and then say multiply by 100 divided by 200. 188,400 multiply by 100 divided by 200. And then we get 94,200. So 94,200 would be a cost of sales. Yeah, 94,200 will be a cost of sales. So in brackets, you say sales minus cost of sales, meaning 188,400 minus 92,400. 94,200. Apologies there. 94,200. 94,200. It's a cost of sales. Therefore, you get your value there, which is 94,200. And then also for inventory to branch, you'll do the very same thing. You'll do the very same thing. They provided you with your sales. Your sales amounts to how much? 8,400. Your sales amounts to 8,400. Your sales amounts to 8,400. So with your 8,400, you'll have to calculate your cost of sale. 8,400 multiplied by 100 divided by 200. And then your cost of sales will be 4,200, in which you'll minus it here. Minus 4,200. The value that you get will be 4,200 here. And then lastly, your closing stock. Also with your closing stock, you'll do the very same thing. The closing stock amounted to 16,508. 16,508. You'll minus it with your cost of sales. You'll have to calculate your cost of sales. 16,580 multiplied by 100 divided by 200. And then you'll get your cost of sales as 8,290. And then when you minus them, you will get 8,290 off. And then you do your balancing figure. Judging by the way of things, here we can look at it very vividly clear. The credit side is the bigger side. So we'll add our credit side there. We'll say 94,200. 4,200 plus 7,350. In which you'll get 101,550. Also on the debit side, the ledger account is supposed to balance. We'll also write 101,550. And then let's calculate our branch profit or loss. 101,550 minus 8,290 minus 52,860 minus 890 and also minus 4,200. And then we'll get your value as 35,310. And then this is how you're supposed to get it. So I think with regards to our ledger account, the only thing that maybe that was a predicament was only with regards to what? Our branch inventory there. Surely this is a first question paper in which you do, and then you have a deficit. And also this is first question paper in which you did. It had a what? It had a discount, a trade discount. Let me be clear and concise. In which had a trade discount. So other than that, I think you should normalize your structures and also familiarize yourself. In the near future, if ever they give you sales, normalize calculating your cost of sales using the markup in which they provided you with. Other than that, thank you guys. Hopefully you use this video fruitful.